Welcome back to another video. My name's Jared, and today we're going to be doing some stock insight and see where some of these stocks are lined up and recover some of the ones that I previously covered and a couple of new ones thrown in there. These are all stocks that I'm invested in. It is not my suggestion that you just go out and buy the stocks without doing your own research. I'm not a financial advisor. I'm not your financial advisor. Just a guy who loves money and I love investing. It's one of my hobbies, and I figured I would share it with you all. So today we're going to kind of cover list the stocks. I got about 10 of them pulled up, 10, 11 of them. We're just going to kind of go through as a insight. I do own every single or a portion of every single one of these stocks. And we'll go through that a little bit today of if I'm going to be buying more, selling, holding, what all I'm doing. Figured it'd be a little interesting for you guys to see, and let's get into it. So, first one up here, AMD. I love AMD. People used to call it Advanced Money Destroyer. It was fantastic times. I wish I would have held. I did end up selling at a profit around 120, somewhere in there. Wish I would have held, man. I do still own AMD and a couple of options, long calls that I've been holding. They've been doing fantastic for me. Um, that's not really my forte in investing, calls and puts and everything. I dabble in it, but I'm not an expert by any means. So, at any rate, AMD is a mega cap. 422.77 billion market cap with 1.6 billion shares outstanding. They're in all the indexes. So in one of the previous videos that I actually talked about, ETFs, index funds, things like that. These are the indexes that you can find it in. It is in the S&P 500. It is, you can see here my positions. I'm up pretty good with AMD. I did sell off a little early on some of it, sadly. But when we scroll down here to the price performance, in the last 5 days, it's up almost 14% in the last 10 years. 12,755%. AMD's just been killing it. A lot of people bought at the highs and were holding for a long time. That's where some of the speculation came in of the advanced money destroyer. But I believe with Nvidia staying stagnant and not really moving, and AMD surging how it has been the past few days, the past week, I think that is indicating that their newer chips are going to start taking a little bit more of that market share. Of course, when Nvidia comes out with the new line or whatever, it's going to swing right back in their favor. But AMD's out here proving something right now, which is just fantastic for everybody. You can see we're at the high of the 52-week range. In the last 52 weeks on April 8th, 2025, you could have bought AMD for $76.48. That's roughly where I was buying. I believe I sold at around 120, thinking it was going to come back down. We all make mistakes. That's why we always like to say you hold on for long periods of time, because you get to survive the lows and cash out on the highs. I am pro people taking profits. It just makes sense. There's no reason to hold on to a stock forever and just watch it go back down. AMD, I believe, is going to be on a growth train for the next, 2-3 years. So it is good for us to enjoy some of that. We'll get into the chart here. And you can see this massive launch that we had coming in, starting about a week ago, week and a half ago, somewhere in there. We had a huge growth spike back in October, and that's kind of been setting us up around that 260 mark. We keep hitting that resistance on the top side, which we just hit again. We did come up to that 267.08, so we did surpass that mark, that resistance, but we did bounce off of it again. So this coming up week will kind of be the sign. If we bust through that resistance mark, then we do have quite a bit of growth ahead of us. That is actually a decent buying opportunity to see where we close on Monday and Tuesday, to see if we bounce and we start settling back down. If we settle back down, then I'm going to be buying in. Once again, I'm in it for the long run, buying actual shares. I'm not going to do call options when we're close to all-time highs again. That would be a little bit silly. I think that's when most people should be capitalizing on the future growth and buying the actual shares. That's just my opinion. Do your own research. But right in here would have been a great opportunity to buy some call options, which is where I did. I saw the growth coming, and we just kind of launched. So right now I'm enjoying some of that, and hopefully we continue. To get into their dividends and earnings, they beat on 3 of the 4 last quarters. They're announcing earnings again on February 3rd. So coming up here pretty quick. They're anticipated to be at 1.91 earnings per share, 135.96 forward PE with a 151 5-year PE. They've definitely crushed growth. They've been crushing growth. The industrial average is huge on growth for them. So they're right up there with everybody else. I'm expecting that they're gonna hit pretty good on their earnings. They beat pretty substantially in the last few, not just by a penny or so, 4 or 5 cents per. And it's just fantastic. I think we're going to see good things from AMD. They don't really have a ton in the news, but they have new lines dropping, and it's just people are starting to realize. So we're going to move on to the next one that I've been buying into is Amazon, or some people call it Amazingzon. It's Amazon. They're doing great things. They are always going to be doing great things. They've been around for so long. They are most people's competition. It's just they're in so much market, so many different markets. They are so many different sources of income that even if they lose one, they're still just going to be fine. And you can see it right here. Their forward PE is 33.1. They are a mega cap at 2.56 trillion with only 10.7 billion shares outstanding. They're in all these indexes. If you want to get them in an index, that's fantastic. And then if you come down here, over the 10-year, they're at 702%. So the reason why I'm kind of looking at Amazon is in the last year, they've kind of been a little stagnant, right? They've just kind of been chilling. Not huge growth by any means, but I think they're primed for it. They're showing good things, and we're going to get into the chart and take a look at some of those things. We're still not at our all-time highs of 258.6 in the last 52 weeks, but that's okay. We have an upwards trend here. We've kind of been bouncing off of supports on the upward side, and we are primed for another liftoff right here. So you can see we bust through our resistances and our moving averages, and then we kind of shoot up, and then we bounce off, and we've been playing with this 246.16 resistance here. You can see where we broke it previously and hit that 258. I think we barely broke it here, and then we came down and met it. And this was another buying opportunity right in here. That's where I was buying. That's where I think we should be looking to buy again. I believe we're going to be coming up to this 246 resistance. Hopefully we bust through it. That'll take us to that 252 resistance, and we can kind of hang out in that channel for a little bit. That'd be a great selling opportunity for people. Pull a little bit of profits and everything. And everybody knows what Amazon's doing. They're everywhere. They're constantly growing. They're doing different businesses. You got the streaming, the movies. You got Amazon Prime. Everybody's ordering stuff all at all times, and they got earnings should be coming up. Q4 earnings. They're going to announce it in February 5th. So Christmas. I think that's all I should really have to say. They beat on the last four. They beat pretty significantly, and I think online spending is just going to keep increasing year after year. We're especially here in America, and it's just fantastic things for them to continue growing. 51.6 earnings per share, and then quarter to quarter from same previous year was 36.36. To have this size of a company and still report those kind of growths, those kind of earnings, that's just fantastic. I think Amazon's going to keep going. I believe that we're in it for the long run, and we're going to see some great things from them. So moving in, this one's a little more controversial because of what's going on. Is Netflix. Netflix was a huge gainer for the last 10 years. You know, you had COVID going on, you had all time highs for Netflix. Everybody was all hungo on them. And they've kind of been coming down in the past few months, especially after they've announced the Warner Brothers deal. The Warner Brothers deal has a lot of debt worry that they're going to be putting on too much debt to acquire Warner Brothers. And then you have Paramount. I don't understand how we have a better deal, so we're going to sue you kind of deal. I don't get it. I can understand if it was unfair trading practices, and maybe it is, and that's what I'm not seeing. But in reality, if Netflix wants to buy Warner Brothers and it's not a huge conflict of interest, then I don't see why not. Paramount, I can understand them wanting to get in on it, you know, trying to go from it. But from what I read, is that for Warner Brothers to back out of the Netflix deal, it would cost them a lot of money. So if Paramount wanted to come in and cover those costs as well, then yeah, maybe there'd be a chance. But I think it's going to end up landing, and it's going to give Netflix a leg up because they're going to have access to more channels and stuff that they didn't. And that's just going to be fantastic for Netflix, and that's why I'm in on Netflix right now. I think I'm waiting for that turnaround. Even if the deal ends up dropping off, I still see Netflix holding strong. Um, that's pretty much what's causing the prices to go low. In the last 1 year, down 10%. 10 years, still 755%. 5 year, 52. 2 year, 77. But you can see in the last 3 months, down 22%, down 26%, 27%, excuse me, in 6 months. I think Netflix is still going to be a strong company, whether the deal goes through or not. You can see I'm down significantly. I'm kind of chasing a little bit. I'm lowering my dollar cost average in, and I'm just waiting for that rebound. I think it's coming, whether the deal goes through or not. I think they're just too strong of a company. So you can see we broke through a pivot line, or 85.45. We're on the bottom side of that right now. Actually, above that, we just got back above it, but we did break through it to the bottom side, and we came back above. You can see we kind of played in this channel. That was a great buying opportunity. I think we're going to come back up, and we're going to hit this pivot line around that $88 mark, and then I see us hanging around this price until we get more clarity on the Netflix deal. There's always going to be a chance that people are going to realize, hey, whether this deal goes through or not, this is a strong company. We need to take a look at it, and they're going to start reinvesting in, and that's going to be fantastic for any of us who are buying in all through this downtrend. I do believe that the company is going to be just fine. I do see us coming back up to this resistance up here at one point or another, whether the deal goes through or not. And let's look at earnings. So this is the reason why I'm still strong on the company is their growth. They're still well in the double digits, 31% quarter over quarter, 27% year over year. And they still have a solid PE ratio. They're way below their average 5 year. And they still are on track to beat earnings. They're 3 out of 4 they've still beat. We got this one coming up in April 15th. That will be a good thing. This one just happened January 20th. They beat and their price went down. I think that's going to be a good sign for most of us. That's a good buying opportunity to me. Strong company. I like what they're doing. I don't mind them buying out other companies. I think that's fantastic. So this is going to be the last of the new companies that I've been purchasing that I think still have some growth left in them. And it's going to be Palantir. Now, Palantir has had huge growth. You can see that by this PE ratio, 388.02. They're mega cap, 404 billion, 2.4 billion shares. They're in all sorts of indexes, just like everyone else. And there's a strong reason. Yes, I am down significantly. It's call options. So I'm just waiting. I'm waiting for their next earnings to show, which is a terrible way to trade for most people, to trade earnings, because Netflix just beat on earnings and they went down. So if the earnings aren't good enough or they didn't beat the previous quarter, that gives negative sentiment and people will sell off. But you can see in the last 2 years, 863% growth, and they've just kind of faltered. They've just kind of been chilling in the last year. Haven't really gone up or down, had huge swings in the last 6 months. They've just kind of been going down. And they're a company that is all about intelligence and counterterrorism and defense, and they're huge in the military. That's the reason it's a speculative stock, because they've already had such huge growth. Eventually, the growth is going to start dying down. But with Trump increasing the amount of defensive spending and already getting approved, then these contracts are just going to start again. There's going to be more and more contracts. Palantir is going to be one of those companies. There's no other way to say it. We're at a resistance line right now at the top side at 169.22. We're currently just above it. So hopefully we continue on and we get back above this resistance line at 177. That would help out my call options hugely. If we could see that 200 mark again, that would be fantastic. We don't have any resistance marks above that line. We'll be back into uncharted growth territory, especially if we start seeing all-time highs again of that 207.52. That would just be fantastic for the company, and there's no telling where they will actually land. We may have a continuous run just like we've had in the past year, 2 years, 3 years. We did show some resistance up here, but all companies are due to have that. I mean, you can't just grow forever, right? So let's get into the dividends and earnings. This is what I was talking about by beating on growth. I mean, they just do fantastic. And let's take a look. Their earnings year over year, excuse me, 110% year over year, and quarter to quarter 200%. So we got some more earnings coming up February 2nd. That's coming up here, 2 weeks? 2 weeks from now. And we're going to see if they continued on with those earnings. If they continued on and they meet or beat those earnings, I do see new all-time highs for Palantir. If growth started to kind of slow down a bit, then we may be in for a little bit of a sell-off, which is why I did the call options, because I know exactly how much I could possibly lose. And I don't want to have to wait 6 months for any kind of rebound. If we sell off, that means we're going downhill. We have a downward trend, huge, massive sell off. I'm going to start buying shares. That's how I'm going to end up hedging those call options. Those call options are going to be done. They're going to be worthless, and that's okay. I went into it knowing the risk. So I'm going to buy actual shares of Palantir, and then I'm going to keep buying the whole downtrend. And when they go on another growth cycle, it's just going to be fantastic for us, and we're going to make those call option costs back plus. So always know your risks as well. So now we're going to speed up a little bit to go through these last ones. These are all ones that I've covered previously. We're just going to take a look at the charts and take a look at where they're at from when I called them out. So Adobe, I'm still a huge buy on Adobe. I think they're going to do great things. You can see back here, we had this massive sell-off, and we went down, down, down. We broke under 300, and then we came back up to $301.07. So we came down to this resistance. We met it pretty hard. We bounced off of that resistance pretty good. That shows a little bit of sign of growth or strength in the market at this level. So hopefully we're exhausting that sell-off, and that would be just fantastic for us, especially since we are heavily into Adobe. It's actually my number one stock right now because of this sell-off. I had to buy more, right? It's just too good to pass up. I believe in the company. They're doing fantastic things, and that's where I anticipate. So all in this channel, I must still be a heavy buy. So until we cross back above that 313, then I'm going to go to a buy. And then once we cross over 327, I'm going to see what the future holds. So I expect good things. I'm looking forward to it. I'm strapped in and wait. They got earnings on March 12th. So you can see they beat on the last 4 quarters. I think they got a good shot of beating this one as well for 2026 start of. They still got good growth. A little low on the 17% for quarter over quarter, but I'm hoping that they're going to improve that a little bit. But they're doing the AI thing. They hit pretty much 52-week lows. It was a low on January 21. So great buying opportunity. I know I did. Once again, do your own research. It's all a risk. All right, CRM. We're at the bottom of that 52-week range. It was also low on January 21st. Look at that. Crazy. Let's get into the chart here and see where our resistances are. Ooh, look at that. Look at that. That is music to my ears. It's hard when you're holding the stock and you see it dip, 8, 7, 8, 10%. But if it's a stock you believe in, it's another great buying opportunity. You can see just like Adobe, we busted through that bottom resistance and then we came back up and we're primed, sit right on top of that resistance. So we showed some strength right here, some buying pressure. Hopefully that continues. If we get back down into this channel, I was buying right here, I'll buy more. Once we break up above it, hopefully we can get back up to this 264 line. That would be fantastic for us. Hopefully we can bust through it. That'd be great. We had a up trend here. We showed really good strength, and then it just kind of. But we had the threat of tariffs happen again and all that. It's all political. That's why you need to go into companies that aren't driven hugely on the politics, but actually on good quality books, leadership, that are just going to do fantastic. So Meta, I think I was talking to you guys about Meta around 620 or so. Well, it ended up going down all the way to almost 600. Look at that. I bought at, I believe, 608 is when my trade went through, which is just fantastic. We already showed huge strength and bounced right back up above that resistance. That was fantastic for us. We met this resistance down here. And it'd been where's the date? Oh, I was looking in the wrong spot. Oh boy. There you go. 11.19. So right for New Year, back in November. There it is, right there. That's what I was looking for. I don't know why I couldn't see that. So November 19th, we were down at this resistance mark, and we almost came back to it, but we showed some strength above it, and we went on a takeoff. So in the last 5 days, we're up 6%. In the last year to date, or 1 year, 5.66%. Meta has not done outstanding in the past year, 2 years. 2 years, pretty damn good growth still. But in the 1 year, it was kind of stagnant, and we've kind of been chilling at a downhill on Meta. I think it's their time to shine. I think we're going to have some great things from them as well. I'm going to continue buying. It's just fantastic things to see. PayPal. So, PayPal, I'll be honest, I'm going to slow down on my buying. I think I'm going to hold what I got and see what happens. I'm willing to take that risk. But they just have such downhill trends that I think that they are primed to do some good things, especially with the fintech and the banking and all that good stuff. I think they're primed, but they have such downhill trend going on. They did break up above that support. Once again, we had that terror of notices going on again with Donald Trump there. And they busted back up against this resistance. If they show signs of growth, if we get back over the $60 range, then I'll probably start looking at possibly buying if we show some real strength and news to support it. But as of now, I'm actually going to remove PayPal off the list. I'm no longer going to be DCAing in. I'm going to accept what I have. Now, if we bust way down to the bottom side, maybe I'll take another look at it as well. But I'm going to slow my roll on PayPal. They did beat in the last 4 earnings and pretty decent, and they got good growth. That's the reason why I was looking at them. But we'll see what February 3rd holds. Maybe that will be a good sign for them. I'm happy with my position so far in PayPal. I don't really need to increase it any longer. We're going to go into the trade desk, and we're going to take a look at trade desk 42 PE, and we are down a bit in trade desk. I continued buying, but you can see in the last 5 years we're down 55%. They haven't been doing anything huge, substantial. We're going to take a look at charts, see where those resistances are that we keep meeting. We're going to zoom in here a little bit so that way we can see there's not a ton of market activity going with trade desk, and we're at a downhill trend. We had a little bit of uphill. It was looking good, and then we met that moving average and we drop right back down. We are right above one of the 36 bar resistance with a upwards 37. I'm gonna slow down on trade desk as well. I don't think I'm gonna buy any more as of right now. I think it's too much of a risk for me at this point. It is highly speculative. I told you guys that in the first videos. It's just we don't know where the competition is gonna go. I like Amazon. That's one of their major competitions anyway. So there's no point in spreading out too far in the same market. So we're going to take a look. They did beat on 3 of 4, met on the other. Q4 is going to be reported February 10th. They had fantastic growth, especially compared to the industrial average. They actually showed earnings, which the industrial average is actually negative. So there's a chance at Q4 earnings, trade desk may flare up. I'm happy with my positions. I'll be happy if it takes off. I'll be okay. I accept the risk if it doesn't. We're at the bottom of that 52-week low. I think if they report growth like they have been, I do think we're going to be back up in that $50 range, which at that point, I may take a look again, and if they have more competition than ever, maybe I'm going to sell off some of my position, accept some of those profits, and walk out of trade desk a happy man. So, ConocoPhillips. Once again, it was highly speculative when I told you guys about it. I forgot to do the little bit of overview. 13.7 PE is what we're trading at, and we are down in the 10-day, up in the 3-month, up in the 5-year, up in the 10-year. Did not beat out on market average S&P 500 comparatively in the 10-year, but that's okay. May still have some growth on the table, right? That's what we're looking for. We're in just the high middle range of the 52-week range. We hit the resistance down here at that 95 mark. That's where I was looking to buy. We hit it. I didn't really have the opportunity. I ended up buying around the 97 range. So we're right at around where I was buying. We hit that resistance hard on top and we dropped right back below it. Once again, this is a long or a short-term play to see what happens with the oil from Venezuela. That's why I'm here. If we continue this upcycle, uptrend, and we get some growth out of it just off the basis of the company, that's awesome. But I'm here to see what happens with the Venezuelan oil. That's exactly what I want to see. And we beat on the last 4 earnings. We got earnings reported on February 5th, so a couple weeks away. And they have negative growth. Once again, we're in it for the Venezuelan oil. I want to see what happens with that. I don't want to miss out on it. If, I end up losing my position or having to accept the loss and move on to something else, it was worth the risk to me. So that's all we're looking for. Do your own research. It's highly speculative. So make sure that you're actually looking at what you buy before you buy it, not just because I recommended it. Plug Power. They had some good news. They finished a installation of a 100 megawatt Gen Eco electrolyzer unit at Galp Science Refinery. That's fantastic for them. They're the turnkey manufacturer for the hydrogen electrolyzer. They handle pretty much all of it, and it's fantastic. I'm looking to see what it leads to. They were huge at one point or another. You can see I got about $2,500 invested in them. Total gains is I'm still up $41. So we're long for it. 10-year. It's been horrible. It's been a rough ride up and down for them. So you can play that game. They're a volatile stock in that $1 to $5 range. So you can play with options and not lose dearly. That's kind of where I started with Plug Power. And I did okay. But we did just break through that resistance and we closed higher. So that's good news for anybody who's currently invested in them. That shows a sign of strength, possibly. Hopefully we can get back up into that $4 range. I will not lie to you. If we hit that $4 range, I am going to be taking some profits. It'd be silly not to. It's too speculative. I'm going to pull out probably, I think I own about 1,000 shares or so. Well, $2,500 worth. Yeah, probably close to 1,000 shares. I'll probably sell $250 or so if we end up hitting that $4 range. Why wouldn't I take my money out, right? Take those profits. You can see we missed in the last 4 quarters on Plug. And I kind of want to hold Plug to see when they go positive. 2027 is when they anticipated going positive. I think it'd be fantastic to be in until that point. I just would love to see where it actually goes to. And I don't want to miss out on being able to buy at such low prices if they actually end up going positive and being a substantial company and a good, clean way for energy. So those are all the stocks that I wanted to go through today. The markets did fantastic last week. I hope everybody was making money. I hope everybody was up. It's great to see when everybody's making money. It's great to see the excitement in the market. I love being a part of it. It's just fantastic for me as well. So hopefully this gave you guys a little bit of insight. Make sure you're doing your own research. I can't stress that enough. if you invest into what you know about, you're going to have way more success than just, oh, I'm buying a little bit of this, a little bit of this, a little bit of this, without doing the research to be able to back it. That's one of the major things that people do that, and then they lose faith in the market. I invested in this. It was supposed to be a 1,000x stock, and I lost $500. I'm never doing that again. I had better luck at the casino, right? And that's what it is at the end of the day. It's gambling, but you're owning a piece of the company. So you're gambling on a company. If you don't like what they're doing, if you don't know what they're doing, then you're just increasing the stakes to that gamble or worsening the stakes to that gamble. You're more than likely going to lose money. And granted, on these huge bull markets, my money guy, I call him a money guy. He had a good quote for me that it was true. And I'm heavily invested into crypto. I was heavily invested in the market. I did good things, in the market, but everybody did. Everything was up. And when me and him talked, everything became stagnant. And some stocks were going up, some stocks were going down. So my portfolio was staying stagnant, right? And he said, well, what are you investing in? And I had to pretty much look the man in the eye and say, a little bit of everything. I didn't really know at that point, right? I wasn't doing my own market research. And he said, so you're one of those. And I was like, well, what do you mean by that? He's like, you threw a dart at a dartboard, you hit the wall, the whole wall, you got points. But now it's time to really aim for the dartboard. So throwing a dart at an uphill market, a bull market, yeah, everything's going up. You're going to make some money, right? But when that market shifts sentiment, it no longer is going up in a massive bull run. You better hope those darts landed somewhere good, right? You want to hit the board. You want to hit that bullseye. That would be fantastic. You want to hit that triple 20. Those are rare. There's a reason for that, right? They're hard to hit. You just don't want to hit the wall. So hopefully that was a good analogy and put a little bit of perspective on it for you guys. I was one of those that just hit a wall, and now I really do my research and I enjoy doing it. Looking at it from that perspective, I probably could have made a lot more money and be a little bit better off where I am today and go from there. So I know a snowstorm's coming for everybody. Please stay safe out there. Stay warm. Hope everybody stays safe. That's the biggest thing. And I will see you in the next video.